Hello, hello, hello. Welcome back. Welcome back. Hello, entrepreneurs. Today's session is a practical walkthrough of IRS Form Schedule C. This form is important for sole proprietors and single member LLCs to report business income and expenses. We'll go through it line by line to ensure that you can file with confidence. So, before we get into this, let me introduce myself. So my name is Shane Harris, and around here on the social media platforms, I'm also referred to as Shane the Negotiator. And I help coaches, consultants, and service providers who are overwhelmed and lack guidance to achieve true financial freedom. And I do that by providing expert tax and coaching services. So today we're going to get into Schedule C Simplified, a step-by-step guide. So let's get on into this lovely topic. So let's begin with, what is a Schedule C? So Schedule C is used to report your income or your loss from a business you operated or a profession you practice as a sole proprietor. It's an important part of your personal tax return filed with Form 1040. Accurate completion is important as it impacts your tax liability. So the Schedule C is also referred to as what's called a profit and loss. And when I'm saying sole proprietor, this includes people who are operating a business as using an EIN or a social security number, or if you are a single member LLC, you are considered a sole proprietor for Schedule C purposes. So if I'm saying sole proprietor, I mean the single member LLCs as well. Okay. So let me go ahead and pull up the Schedule C so that you can follow along as I'm explaining what goes where. So let's go on here and pull up my share screen. See which one of these is it? I have stuff everywhere. Let's see which one, if it's this one. Yep, here it is. So I found it. All right. So here is our Schedule C. And I'm going to be sometimes looking here and sometimes I'm going to be looking at the other screen because the Schedule C I pulled it up on my other screen. So that's what happened when you see me kind of looking back. I'm talking to you guys on the camera, but I'm also sometimes looking at the Schedule C over here. Okay. So let's go through the line by line explanation. So here's a Schedule C, profit or loss from businesses. And I said sole proprietor. Remember I said that name sole proprietor, it also refers to single member LLCs. So this is the 2023 because that is the filing season that we're in right now. Even though it's 2024, when we file our tax, we're filing taxes for 2023's taxes. So whatever year you end up watching this in the future, it'll apply to whatever tax season that we're in, and the year that you're filing your taxes, this is going to apply to. So you have the name of the proprietor or the person, which for this practice only it's our practice client. This is the name that I made up on here. You're going to add the social security number. So if you're our 1099, you're independent contractor, you're considered sole proprietor, and you're operating with your social security number, you'll put your social security number if you're not using an EIN number. If you are using your EIN number as a sole proprietor, or if you're a single member LLC, where it says on line D, option D, you would put in your EIN number at that time. So we're going to go to A. A says principal, business, or profession, including products or services. So whatever it is that you're doing, that's going to be the name. So if you are doing consulting, you put in the name there. If you are operating with your name, then you know that if you don't put anything there. Where it says B, enter the code from instructions. So I'm going to actually stop sharing this screen and I'm going to pull up another screen so that you can see what codes I'm actually referring to. Because oftentimes you're missing this because you're like, well, what codes? I don't understand. So these codes is called the NAICS codes, North American Industry Classification System. That's what NAICS stands for. So this is for principal, business, or professional activity codes. So it has all kinds of codes here for the industry that you are operating in. So let's just say, I'm working with a lot of coaches, consultants, and service-based businesses. I'm sometimes working with e-commerce. I'm working with all different types of industries. So if you don't know your code and you come to me, I can help you look up your code to find it for you. But when you created your business, you generally picked out a code, but you may not have, but you definitely need a code to file your taxes because the IRS needs to know what industry that you're working with. So this is a list of all the codes that most of the codes it can potentially be. So we'll just go ahead and just, scout through this list. So we have real estate, we have wholesale trade, utilities, mining, food and beverage, storage, religious. We got professional science, scientific and technology. Yeah, legal services. It's so many different codes on here. So you would come on here to look for the one that's associated with your business. So I'm gonna go underneath healthcare and social assistance, and I'm just going to grab a code from there. So let's just say it's home healthcare services, which is 621610. So if you're looking on my screen, underneath the third column, you will see healthcare of social assistance, and I just chose the first one on the list, home healthcare services. Now, this is just for our example. I'm not actually putting it on the form, but I'm just kind of showing you how you can find your codes. Okay, so we're going to stop sharing this screen and go back to the screen that we were already sharing before, which is the Schedule C. Okay, now that we're back. So let's go on over. So line C says the business name. So again, if you have a name of your business, you will place that in underneath C. If you do not have a business name because you're operating as a sole proprietor with your EIN, or even if you're using your social because you're a 1099 contractor and you're using your name, then you don't put a business name. The name that has name of proprietor, that is your business name. You would just leave that blank. Everybody else in C, you would actually put your business name. So your D, put your EIN, as we mentioned, if you have one. So, and underneath E, that is where you're going to put your business address, including the suite or the room number. So you put the city, state, zip, and all that good stuff. Or if you're using a PO box, you're going to put that information there. So let's go into F. So F, you got to choose your accounting method. It's either going to be cash, accrual, or it's other. It's usually not going to be other if you're filing it. It's either cash or accrual. So I've kind of explained in previous slides what cash versus accrual mean. Cash just pretty much mean people paying you your cash money. You're reporting it as you got that money. So if you made a purchase, they paid you for the money, you can report it it's reported at that particular time. Accrual mean you can invoice someone and they pay you next year sometime, but you pretty much report that cash. If you report it at the time that you received the service. Accrual, you can report that even if you didn't actually receive the services yet. It can be a future date, but you can still report it for this particular year, or you can defer to the next year, whichever one. So G, did you materially participate in the operation of this business during 2023? So as I said, if you're watching this in the future, it'll be whatever years. It might be 2024, next year, 2025, so forth. If you're going back and you're doing previous years' taxes because you were slipping and you didn't do 2022, 2021, and so forth, then it's whatever year you're doing. This question is going to ask you that for that particular year. And you would click yes or no. So if you participated, of course, you click yes. If you didn't participate, then you click no. If you started or acquired this business during that year, so you would check here. So if it's a brand new business that you created that year that you're filing for, then you would check yes. If not, and you've had the business from previous years, then you would click, of course, click no. Did you make any payments that would require you to file 1099? So this is if you hired contractors and you paid them, of course, over $600, then you would have to issue them a 1099, and you would check yes if that is the case. If you did not hire any contractors, or you had contractors but no one, you paid $600 or more, you paid them $455, you paid them $599, you're not required to file a 1099 for that individual. So the answer to that will be no. So let's go into part one, where it talks about the income, part one income. So underneath line one, that's where you would put your gross receipts or sales and report the total income your business received. So whatever amount your business made, this is not, you're not putting W-2 income or anything here. The only time you're putting W-2 here is that it's, look at here where it says, gross receipts or sales. See instructions for line one and check the box. If this income was reported to you on W-2 and the statutory employee, box on the form was checked. So if you're a statutory employee, if you and your income was reported on a W-2, you would complete a Schedule C. Everybody else, if that box was not checked, then you do not complete a Schedule C. Okay, you would go ahead and, your W-2 will go on that 1040 on the actual tax form, which maybe I'll go over the 1040 if I have time in the season, because I have I have topics that I've scheduled out through April to talk to you guys about. So if I may do an additional one to throw in how to do the 1040 or how to read the 1040 for some of you who might still struggle with that. So this is only business income. So if you have 3 different businesses, each business have to have its own Schedule C. You do not lump them all up. So like, for instance, I have my Schedule C businesses because I have corporations as well. So that's something different, but I do have businesses that require me to file Schedule C. So my Airbnb business, and when I was doing Toro earlier in 2023, that will be considered Schedule C businesses. So I can't put Toro and Airbnb on the same Schedule C. Each one will have to have its own. So Toro would have one, Airbnb would have one. So you guys may have a similar setup because many of you are operating multiple businesses. And of course, if you're corporations, then you will have those corporate taxes as well, which comes with the K-1 and all of that fancy stuff that I have mentioned before. So let's go on in. Where were we? So yes, we finished line one. So line two, we're going to go to returns and allowances. So this is where you're going to deduct any refunds that you gave your customers. So this is really big with a lot of my e-commerce clients, because sometimes they do have refunds that they have to process because the product was defective. The customer didn't get the product. Whatever the reason is, they usually have refunds. It's rarely a case where they don't have at least a refund. Sometimes the refunds are not huge, that they had refunded. It's refunds mean you refunded the money back to the customer. Because remember, when you do your books and you make the sale, it counts towards your income. So if you have a refund, it's still counted in the income. So you have to subtract the refund when you gave the money back to the customer. So you have to subtract that off. So that's why you put that underneath returns and allowances, because that is going to subtract from 1 and give you a new total for number 3. So an example of that, let's say you made $50,000 and you refunded $100 in total to customers, then you would have, your new total would be 49,000. 49,000. Why is my math not math? Oh, whatever. We'll just go in. So for 50,000 is the amount that you made. You refunded $100, and your total now would be 49,900. It would be underneath number 3. So number 3, where it says subtract line 2 from line 1, that's what we just explained. That would be the total there. So line 4, where it has cost of goods sold. Now, this is only for businesses that is selling products. If you're an e-commerce client, this definitely applies to you, even if you are not an e-commerce client, because I do have clients, and some of you may fall into this category, where you are service-based and you're not selling products on like e-commerce or anything like that, but you may have products that you're selling. You may have journals or some other type of products that you're selling to your customers. This would apply to you as well, and you would put that information there. So underneath this line 4, you would fill this out after you complete part 3. So you can't put a number here in line 4 as yet. You will wait until we get to, because we're only in part 1. Once we get to part 3, then we will complete the cost of goods section, and that number is going to flow over to that box to give you your total. So number 5, we get line 5, we're going to subtract line 4 from line 3 for your gross profit. So whatever your total amount is for your cost of goods sold, that's for what you have remaining in your sales. It's going to add to that, and you subtract it from line 3, and then you're going to get your new total. So we're not worrying about that right now because you're not going to have a total yet. When you're first doing this, you have to get that number first, and then it's going to come back up and calculate that. Now, I know all of you, if you're doing it yourself, you're using one of those other platforms that you can input the data. The software is going to calculate this stuff for you automatically once you input the number. But I'm teaching you how to do this and how to read it so that when you go to the professional and you see these numbers, you know what they mean and what they look like and what is what. Okay. So let's go on down to line 5. Okay, we said we already did line 5. We subtract everything. So then line 6, other income, including federal, state, gasoline, fuel tax, credit, or refund. So this, you don't worry about that right about now. We go to line 7. Number 7 is the gross income. So that is all of you add any other income that you would have had, you add that in there. So if you had your income for your business, then you have the total there. Any other income that you may have had that might have been related to that, but you might not have calculated in your books or whatever, but it's still relation to that business, you would add that information in on line 7. So this is income like your interest, or if you had prizes, you would add that in that area. So of course, now all of that would have calculated up. So then we go into part 2. So part 2 is where your expenses. So part 2 is the fun part. And part 2 is the part where it gets a lot of you in trouble because you need books, you need bookkeeping, you need to have accurate records for part 2. Okay, so let's get into line 8 through 27. So that's this entire section, begins at 8 at advertising, and it goes to line 27B, where it talks about energy efficient commercial buildings, deductions, and so forth. So this whole section is part 2, and this is where your books is going to be important to you because you're literally going to copy this information directly from your books and place it into your software. Well, this is pretty much what we're also going to be doing when you have books. Or some of you may have spreadsheets, you may have Excel sheets and things like that. Now you can see up front why bank statements is not bookkeeping. Because if you're giving me 12 months of bank statements and I'm looking at your bank statements, you expect me to pull all this information out from your bank statements for $500. Do you think that is fair? Probably not. So that's why you need bookkeeping. That's time consuming because you may have hundreds of transactions in a particular month. 300 transactions for some of you who are businesses is popping because you have lots of expenses coming, going out of your business. That is a lot of bookkeeping to sit down to do that when we're trying to file your taxes, or even if you sit down yourself and you're trying to do your taxes, this is going to take you hours to gather all this information. And what's going to happen? You're going to get frustrated and you're going to start skimming through your bank statements and you're going to miss stuff. The same thing as the professionals. You'll get frustrated after a while and stuff is going to get missing. It's going to be time consuming. You're going to start looking at numbers and they all going to start looking alike. It's going to be tedious. So that's why you need bookkeeping, which is a separate charge. It's a separate fee because that you have to actually sit down. We have to sit down and take the time to go through these things, to categorize it and get it in place. Filing your taxes is not the time when you do bookkeeping. This needs to be done before you file your taxes. Okay. So I'm just going to run through this briefly. I'm not going to go through each line. I'm just going to go through briefly. So line A, it says advertising. So just where you're going to list out whatever you spent in advertising costs. So you'd had your marketing and your your marketing costs. you will put that there. You're paying for like Facebook ads, Google ads, IG ads, whatever. You're paying for Canva, you're paying for Adobe, whatever. That all falls underneath advertising. They have some car and truck expenses. They have some depreciation on there. Let's go into legal and professional service. That's at line 17. I like that one because that is the one that you put if you paid for, if you hired a lawyer, if you hired an accountant, or you hire a tax professional, whatever you paid, you put it on this tax return. Now, this is for the year in which you paid it. So we're now talking about 2023's taxes that we're going to be filing next. Whatever year's taxes that you file, it's when you paid it. So if you paid it in 2023, that it goes there. So for instance, if you file your taxes for 2022, last year's taxes, when you file, you pay a fee for that. So when you filed your 2022's taxes, you couldn't put that fee on it because you didn't pay that fee in 2022. You paid it in 2023. So now that you're filing 2023's taxes, the fee that you paid for 2022 in 2023, you can now put it on your 2023's taxes and get your deduction for that for whatever you paid. So many of you, you say, oh, I can't afford it. I don't want to pay. I want to do it myself because you don't want to pay the money. You're getting it back as a deduction. So essentially, you're recycling the money. So if you paid, I'm just going to make a number for bookkeeping, you paid $6,000 for that entire year for bookkeeping, it's deductible. You paid $750 for tax prep, it's deductible. So you get to deduct it back off of your taxes. Then it has some office expenses, which we'll go through the office expense next week. I'm going to break down, show you what that looks like. And you have some travel meals and things like that on here. So that's pretty much expenses. So all the expenses you tend to have in your business, this is where most of it is going to go. So let's go on over to line 28. So we're finished up there in that little box. So now line 28, it says total of all your expenses. So you're going to subtract this from line 7 for your tentative profit and loss. So in 2028, everything that fell in part 2 between number 8 and 27B, it's all considered an expense. So that you subtract that from whatever number that you had underneath number 7 that had your gross income. So whatever your income was, so let's just say, because I like nice, easy math, your income, we're going to keep the 50K. It was 50K that you made. You had a refund for $100. So then your income became $49,900. So that is your new number. So $49,900 would be on gross income number 7. So when you get down to 28, let's just say 28 was 20,000. We're going to say you had 20,000 in expenses, or we'll say 30,000 in expenses. We're going to make it a little bit higher. So then you're going to subtract 30,000 from that 49,900. 49,900. I'm going to put it on my calculator. 49,900. Even I can do this up in my head. Sometimes when I'm talking online or whatever, I'm a bit distracted and my math don't math correctly. So that's 19,900 is what's going to be on 28. So as you can see really quickly how that's a big deduction that you already got just on your expenses. And I just made up a number. You could have had more than that if your income was 50,000, or you could have had less than that. We're just making up numbers at this point. So 19,900 is the income that we have for number 28. So currently that is considered a profit, because either profit or it's a loss. That's why it's called profit and loss. You're either profitable or you're not profitable. So let's go into 29. So 29 is the tentative profit or the loss. If it's a loss, you might also need to complete what's called a Form 8582. So you're going to say, well, what the heck is the 8582? That is passive activity loss limitation. So generally, you have certain limitations of how much you can actually deduct. So I'm not going to really get into that. And that's why I say you need to get with professionals, because there's lots of other forms that gets added in when you file your taxes that you may not be privy to. So that particular form, you may have to fill out if you have a loss, because you can only deduct up to a certain amount if your income is within a certain threshold. Like I said, I'm not going through all of that on this particular one. We're just mainly talking about the main thing we're talking about is this Schedule C, because this is going to get really lengthy if I start adding in all those other forms. Okay. So that is on 29. So where are we now? So 30 and all these other ones, I'm not really going to go through so much, because we're going to talk about 30 when we talk about the home office expense. So that's what this is. I'm just going to mention it, but I'm not going to get into it. So 30 is expense for business use of your home. Do not report these expenses anywhere else, and you're going to have to complete what's called the Form 8829. So next week, we're going to talk about that, and I'm going to show you that. So that is 30. So we're not going to worry about that for right now. That'll be on next week's. Number 31, net profit or loss. So of course, whatever after the 29 was subtracted. So let's just say we're going to make up another number again. So let's just say we had 19,900, and when you did your home office expense, you got another 3,500 off. Well, we're going to make it easy math, $3,000. So it's going to be 19,900 you had minus that 3,000. So now you have 16,900 is going to be the new total. So let's go on down. If you have a loss, check the box. Describe your investment in this activity. So this is number 31, number 32. So it would be, is it all investment is at risk? Is it some investment is at risk? I'm not going to go into that right now. Again, that's why I say to you, speak to the professionals, because doing this yourself is not advisable. So let's go on down to part 3. Remember, I said we're going to come back to part 3, because we're going to come back to the number 4. Because remember when we went to the line 4, it was when we first got started, and I said cost of goods sold. You're going to have to come back to that, because it says cost of goods sold from line 42. So you can't fill this in yet. You have to go to part 3 to complete that. And when you get 42, 42 goes up to the top. So right now we're at 16,900. And I want you guys to keep track of this, because I want you to see what it can really look like. So we have your cost of goods sold. So e-commerce people, this is your area where, we do this a lot heavily with e-commerce. And if you sell products, but you're not e-commerce, you're going to have some information here. For everybody else, if you do not sell any products and it's straight service only, you have coaching, your therapist, whatever it is you're doing, it's all service. You will not complete part 3 at all. So 33, it would be the method of your payment. Oh my gosh, your method of your payment. Method used to value closing inventory. So when we're talking about inventory, this is you have to choose which one you use. So you either use the cost, or which is A, or B, lower of cost or market, or C, other. And if it's other, you have to attach an explanation on which other that you use. 34, was there any changes in determining the quantity, cost, or valuation between open and closing inventory? If yes, explain. So if it's pretty much straightforward, then it's nothing really you have to explain. Otherwise, you will have to explain some of these things, yes or no. So number 35, inventory at the beginning of the year. If it's different from last year's closing inventory, you have to explain. So what this means, when you end the year, December 31st, whatever inventory you had up to 11:59 at midnight, it's pretty much over. So up to whatever you ended the year with, whatever you had by 11:59 p.m., and that's why you got to get the books. It'll be in the books. Whatever was in the inventory cost, that is what inventory total amount that you had. You record that. When January 1st comes, 12 a.m. is January 1st. From that point on, whatever the amount is, you record that. Whatever you end the year with should be the exact same number that you start the year with. The numbers is not going to change between 11:59 and midnight. If it did, it goes to the year before. So let's just say you ended the year with 5,000. I'm just going to make up a number. Let me write this down before I forget the 5,000, and then we're trying to do calculations and we're off. You ended the year with $5,000. This was 2022 when you ended the year. I'm sorry. Yeah, 2022, December 31st, 2022, you ended the year. You're going to write down what that was. So then January 1st, 2023, you write that same number down, and that is the number that's going to go on line 35 on this form. So which is the $5,000. So purchases, less cost of items withdraw for personal use. So if you made purchases, you have to subtract. If you took some of your inventory and you use it for yourself, you have to subtract that. So let's say you purchase 10 bottles of shampoos. I'm just making this up. And out of the 10 bottles of shampoo, throughout the year, you use 2 of them for yourself, your kids, your husband, you gave some to your friends to use, whatever. That is considered personal use. So you can't count all 10 bottles into your inventory. You only can count 8 because the other 8 you use for yourself. So you put you write that amount here on the line 36. Excuse me. Cost of labor, do not include any amounts that you pay to yourself. So whatever the cost of labor is in relation to inventory, you'll put that there. Materials and supplies, you add that number on 38. Other costs related to it, they can be like shipping costs and things like that, then you add that there. So then you're going to add lines 35 through 39, and then a new number is going to get to 40. So let's say, you had all of these expenses. Let's increase this number to 10,000. We're going to add it to 10,000 because I want to make it, we're going to do some subtractions and stuff on here. So we did all of this, 5,000, we started at 10,000, and then you had all of these other numbers that's going on in between here, these supplies, materials, and other things that you purchased. Then we're going to add lines 35 through 39. And now we're going to add another 5,000 to that cost. So we started off with 10,000. I changed the number from 5. We started at 10,000, and now you have 5,000 additional. So now your total is going to be 15,000, and that is what's going to go down on 40. So inventory at the end of the year is going to be 15,000. That is the amount total that we got from the lines above. So then the cost of goods sold, you're going to subtract line 41 from line 40. So the end of the year inventory is going to be on line 41, and you're going to subtract that from whatever was on 40. So the inventory at the end of the year. So December 31st, remember you had the inventory at the start of the year was that 10,000. Like I said, we had changed the number. So you had 10,000. And then now, once we did all these calculations and stuff like that, we have inventory at the end of the year. We end up getting up to 15,000. So now you have 15,000 in inventory, or it could have been less. You could have had 4,000 inventory, whatever the calculations end up coming up to be. That is what you put there. So inventory at the end of the year, 41 for hours. We have 15K. Cost of goods sold, subtract, I think we already did that. Subtract line 41 from line 50. So whatever 41 from line 40. So the 41, we're going to go ahead and put the numbers in that particular spot. So the number, I'm sorry, I had to pause that for a second. My internet was going a bit slow. So let's go back to that. So I'm stated something incorrectly. So the start inventory was $10,000. Everything between 36, like the materials, the cost of labor, all of that stuff is not an addition, it's subtraction. So it's subtracting it. So we said the number was 5,000. So we're not adding 5,000 to the 10,000 and make it 15. We're actually subtracting. These are subtractions. So the 10,000 was what you started you ended the year with the year before. For this particular purpose, we say December 31st, 2022, and you put that amount. It started the end of that year, and then inventory at the beginning of the year, it would be that same exact number. So when we go down where it says inventory at the end of year in 41, we're talking about the inventory at the end of the year for 2023, what that amount was. So after we had all of these subtractions, which that the subtractions is $5,000, our new total is going to be $5,000. So your inventory at the end of the year will be $5,000. So I hope I didn't confuse you when I misspoke and I said that. And now with the correction. So again, you started the year at 10,000. You had some expenses that was in relation to inventory worth $5,000. So your new total, 5,000 minus the 10,000, is $5,000 for your inventory at the end of the year in line 41. And my apologies for that mix up. So your cost of goods sold from 42 is going to be $5,000. So this 5K is going to flow up, and we're not actually putting the numbers in, so it's not going to show you anything on there. So this is going to flow up to line 4, where it says cost of goods sold. It would say $5,000. So remember, when they add for the in this particular instance, it asks you on part 1, lines where it is, line 3, it says subtract line 2 from line 1, and then we have the number cost of goods sold 43. Number 5, on line 5, it says gross profit, subtract line 4 from line 3. So we have that 5,000. We had $5,000 that we're going to subtract from the total that we had, which was originally 49,900. Because remember, we had the income, then we had some $100 in refund. The income was 50K. We had $100 in refund, which was 49,900. So this 49,900, we're now going to minus $5,000 because you get a subtraction for the cost of goods sold. The new total is going to be $44,000. Okay. So when we did all of these subtractions, because we had the income and all that stuff, we had 16,900. So now I'm just going to minus the $5,000 from there because we did things kind of backwards. It was 16,900 and we're going to minus 5,000. So now we have 11,900. That is your profits, which is still in the green. It's not a loss. So that was part 3. So now let's go on to part 4. So part 4, this is going to be information on your vehicle. So if you're claiming vehicle expenses, you will provide the information about the business use of the vehicle only. So if you're not using your vehicle for business, then you wouldn't put that here. So in this section, and there's another form that's going to be filled out. I'm not going to go into that form. Maybe I'll do that another video. Maybe I'll do a masterclass and we can really talk about this, but I'm not going to do that here. So in that form, it's called Form 4562 for businesses. So you're going to pretty much use this form to complete it for your car or truck expenses on line 9 and are not required to file 45. So let me read this again. Information on your vehicle. Complete this form, this part only, if you are claiming car or truck expenses on line 9 and are not required to file a Form 4562 for this business. And then, of course, it says the instructions from line 13 to fill this out, and you must file the Form 5462. So if you're just putting in the straight information in there, you don't need this form, then you just put this information in that's here. You go ahead 43 to 47B, you will complete that. Most of the times, if you have a business, you are going to complete that 4562, and which is going to be the depreciation form and all of that stuff for the vehicle. You need to fill that form out. So that's why, again, you might want to get with a professional and don't do this yourself. But for everybody else that is not going to be completing that form, then we're going to go through here. So when did you place your vehicle in service for business purposes only? So they're going to need the month, the day, and the year. So whatever day. So if it starts January 1st, you put it in there. If you started in July, you put July. Whatever the date you put the vehicle in service. So you could have purchased the vehicle 5 years ago and then now decided to put it in business July 2023. Whatever date of the date that you put it in operation, that is the date that you put there, even if it was from a previous year. So we're doing 2023. You could have put this vehicle in business in 2021. You put that year and date there. Okay. Number 44. of the total number of miles you drove your vehicle during the year, which is whatever year we're in. We're talking about 2023. Enter the number of miles that you use for the vehicle. So you're going to put the business, how many miles you drove for business purposes only, and commuting miles, and then C, which is other. So if you have personal miles, then you can put that on other. If you have commuting miles, you put the commuting miles, because the commuting miles is generally not deductible. But if it's business miles and you don't have all of that, you definitely want to put the business miles. Don't worry so much about the others, but you want the business miles. So that's why it's a good practice. And this video is airing by the time we do this. It's in the beginning of January. So you still have time. If you're watching this in January, go take a picture of your mileage if you haven't done it yet, because you're going to need that throughout this year for next year when you file your taxes if you have not been keeping up with your mileage. So was your vehicle available for personal use during the off-duty hours? So if you have this vehicle and it's straight up for business only, so let's just say you are a service-based business and you go to your customers to do things. So for instance, you are your service is that you are an electrician. So you go to people's homes to fix their stuff, or you go to their business. You're driving to get to that particular location. You have a work truck. You only use the work truck. You don't use it when you're off duty. You put no. If you use this work truck for work and then you also use it, to enjoy on the weekends or when you're off, then of course you put yes. Was it available to use in the off-duty hours? You would put yes. If not, you would put no. Do you or your spouse have another vehicle available for personal use? So if that's your work truck, but you're saying you don't have a personal truck, then how are you getting around? So be careful with that. So it's not impossible, but just be careful of that and have your documentation. If you have a personal vehicle, it's a lot easier to prove that, okay, yes, that was a work truck because we do use this other vehicle. So you put yes or no, whichever apply. Do you have evidence to support your deductions? Yes or no. So you want to have evidence, because whatever you put here, if you should get audited, they're going to ask you to provide that documentation. And if you don't have it, they're going to reverse this credit, these deductions that you're going to be taking. Is the evidence written? If it's in your head, it's not going to benefit you. So it should say yes. If you say no, you're likely going to get audited, especially if your mileage is high, and they're going to ask for this information and likely going to reverse this deduction. So you need to have it written. That's why I said take those pictures, record down the start mileages, record down the ending mileage, keep track of your business, and track your miles from point A to point B. You can provide all of that as evidence. It's going to be beneficial to you. I'm telling you. Now, this is like the quick way of doing it. Otherwise, 4562 goes into more details, and it's more options to write off more for this vehicle with depreciation and all of that stuff. Here, you do not get depreciation. This is the quick wham bam, thank you, ma'am. And I hope I don't offend anybody when I said that. That's the quick in and out. The other one is the more detailed, take your time, and then let's get it done. Okay. So now let's go into the final area, part 5, other expenses. So this is where you're going to list below business expenses that's not included on line 8 through 26, line 27B, or line 30. So 8 to 26 was all those expenses that we had talked about before in part 2. Line 27B was the total amount that we end up getting. And then on line 30 was where we had the home office expense information. So any other expenses that you have for your business that was not listed anywhere else above, you would slide that in here with you would list it out and put it here. So oftentimes when we're doing your return, you would have QBI, qualified business expense, would be listed here, and it'll have the amount and things like that. You don't know what that is? Get with a professional. Don't do your own taxes, because that information is going to be relevant here. So total other expenses, so you would list them all out and the amount, and then line 48 is where you would add it all up and you have that total there. So let's just say after we did all of that, we added the vehicle expenses, and we're going to add more numbers to this because we had 11,900 as your gross right now. So now we're going to add your vehicle expenses. So the mileage went up For 2024, I can't remember. It's like 65 cents per mile now, something like that. I can't remember. So don't get me quoting wrong miles. I can't remember exactly, but 60 something miles, 60 something cents per mile that you're getting now. For 2023, I forget the amount. I can't remember off my head right now what the amount was. So matter of fact, let me go look that up real quick so we can do a quick calculation. Let's put in here. I put 6. Okay, here it is. 2020 for 2023 tax rate, taxes filed in 2024. So we're in 2024 now for those who are watching this now. And we're talking about 2023's tax season. So last year's taxes, the IRS standard mileage rate is 65.5 cents per mile for business, 14 cents per mile for charity, 22 cents per mile for medical and for medical and moving purposes. So 65.5 cents, 65.5 cents. So let's get some business miles in there. So let's just say your vehicle, you had your vehicle, use it for business, and we're going to make up a number. Let's say how many miles you want to drive for that year. We're going to say you drove, I don't know, 750 miles. And my pen is acting stupid. 750 miles for business. So we're going to do 65.5 cents multiplied by 750 miles, and that is 49,125. And I did that wrong because I need to do it in I need to do that in the cents. So I'm just going to move, we're going to move the decimal place on here. So that's going to be roughly $4,913. We're going to round up. I didn't move, when I did the calculations, I didn't move the decimal points over. It should be 0. I'm going to move the decimal 2 places over, 0.0655. That should be the calculation, which ended up being $4,913. See, my math was mathing this time, but normally you don't. So we have 11,900 minus, we have 4,913 equals 6,987. That is your new profit for the year. So you see how we started off at 50K in revenue, and with all the deductions that's related to the business, not all, some that we have discussed, because there are more. We didn't do home office. So imagine adding in home office in there. You could essentially zero out your income for your business. Now, this may be beneficial to you if you have a W-2, you have a job somewhere, and you have income over there. So your adjusted gross income might be right now at 100K. So with the business income. So now we took almost 50,000, wiped it clean. Your AGI now brought you down to 50 something thousand. So that's actually going to be beneficial to you versus if you didn't have any of these deductions at all. And it's more deductions that is missing that I didn't get into. I'm just giving you the basic overview on how you fill out a Schedule C, but there's lots and lots of more deductions that you're eligible for this based on the type of business that we selected, which was home health or something like that. It was something medical. So 6,987. That is currently what your profits are going to be for your business. So I hope that makes some sense. I hope you guys really understand what it is that we went through. And then you can really, let me take this presentation off now. Stop sharing. Yes, I hope you can understand what it looks like up close and how I explained it to you. If you have any questions, you can drop me a message. You can DM me. You can email me, because that information is available to you on my social media sites. And, we can schedule an appointment and I'll answer any questions that you have in relation to what I just discussed. Anything else, of course, you can schedule an appointment for assistance with filing your taxes and any other questions that you have with your accounting services or whatnot, of course, and if you need coaching or anything, because I do go into more details if you are in my coaching program on how to really take care of these matters. So some tips for accurate filing. Let's discuss that. So you want to ensure you keep, and I'm going to keep saying this as many times I've done videos. We said this so many times. You want to ensure that you keep thorough records of all your income and your expenses throughout the entire year. not just when it's time to file your taxes and you're trying to hustle up and scramble and get all this documentation. No, you need to have this, keep it throughout the year. So every quarter, you need to be gathering up your information so that you can have them in a place where you can easily get to them. You want to use accurate softwares to work with a tax professional or to track this information accurately. You want to double check your calculations and consider their impact on your overall tax picture. Also, do not mix business and personal expenses. As you can see, as we went through, it didn't ask you anything about anything personal except when it was talking about cost of goods sold. So a lot of times, if you have one bank account and you're using that bank account for business stuff and using it for personal stuff, because the infamous word, oh, I didn't make that much. The IRS don't care about you not making too much. If it's business related, that is what they want to see. They do not want to see your personal stuff on there because you likely will get audited and they're going to disallow all those deductions, because how are you going to prove this wasn't personal when it was supposed to be business? So stop mixing business and personal expenses. Some of you you won't learn. A hard head makes a soft you know what. You won't learn until you get hit with that heavy, hefty fine. And then, and only then, maybe. And I say that maybe because there's others of you who have been hit several times in a row and you still keep doing the wrong things. So I don't know what is going to get you. Maybe when you get put in prison, maybe that's going to make you wake up and do things the right way when they put you in prison because you didn't pay all those penalties and those old tax debts and things like that. Maybe that's when you'll wake up. For the rest of you, that you're watching this information and you're really taking heed to what I'm saying and you want to learn and you want to start implementing, you want to start doing the right things moving forward, then do not mix business and personal. Everybody else, if it's working for you, keep doing what you're doing. You know what I'm going to say? If you like it, I love it. Okay? So let's do a quick case study. So let's just say we have a case study here, a freelancer graphic designer. By diligently tracking his expenses and income, he accurately completed his Schedule C, just like you did. We just completed one, ensuring all eligible expenses were accounted for, which significantly decreased his taxable business income. So as you can see, we started off at 50K and we're currently down to 6,987. So I'm going to save this number because next week, when we talk about the home office expense, I'm going to add it to this 6,987 and see now where you are. You're likely going to be at a negative number. And of course, that could be a positive or a negative, depending on what it is you're trying to do. If you're trying to get a house or something like that, you don't want to have a negative number in your business because you need that income to add to whatever other income. And especially if you don't have any other income, you need this to be a positive number to show that your business is profitable so that you can get your house. If you're not worrying about trying to get a house and you make too much money and you're trying to offset some income, well, of course, a negative number might be beneficial to you for this year. Now, moving forward, every year, you don't want to have a negative number. You don't want to have a loss every year because after 3 to 5 years in your business, your IRS can say, well, your business is no longer a business. It's considered a hobby. So it can transfer that. And then now you can't deduct those expenses, but you still have to report the income that you receive. So we definitely don't want to get into that. So remember, 6,987 when we do the next discussion. And the next discussion is actually going to be on Friday, where I'm going to talk about the home office expense. So if you're on Facebook or anywhere else, it does not stream live on those platforms. It's only live on YouTube. So if you're not following me on YouTube, go on over there. And if you're on YouTube right now and you're watching this and you're not subscribed to my channel, you want to subscribe to the channel so you can get those and click the bell so you can get the notification so that you can watch this and then go back and watch that other one, the home office expense that I'm going to be discussing and tying it into the Schedule C and giving you your new total and telling you what your taxes could probably look like potentially. Okay. So in conclusion, like I said, completing the Schedule C can be an exhausting task, but it doesn't have to be. With organized records and understanding each line, you can accurately report your business income and expenses and not have any problems. So up next, as I mentioned already, we're going to be breaking down Form 8829 for home office deductions. And that's one of my favorite ones. You get to write off your rent and your mortgage and your living expenses because you have a home office. One of my favorite things. So you don't want to miss that one coming up next week. It's essential for anyone working from home. Stay tuned for Mastering Form 8829, Maximizing Home Office Deductions. So in closing, I want to thank you for watching. If you found this guide helpful, please like, share, and subscribe. Tell a friend and that tell a friend. Accurate tax filing starts here. So see you in the next video, and I hope you guys enjoyed this, and I hope you enjoy your day, and I have a wonderful rest of your day.